Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today, I'm going to share with you my thoughts on the current situation. These days, I've been hearing a ton of hysteria surrounding the Trump administration, what's going on in the global economy, markets, and lots more. I've been reading Wall Street Journal and Bloomberg articles that scream of bias. I've been listening to academics and historians, economists talk about the current tariff and trade war as if it's a singular event, not tied to the last 30 years of globalization. Well, today, let's get away from mainstream media, mainstream academia, and just give you my perspective. Now, one of the things that I have been hearing is that the Trump administration is using a school of economics that is not well-founded. Well, of course they are using a different school of economics. The idea that tariffs might increase prices to the consumer is far from the most important issue. What I fail to hear commentators reference is that the United States is at war. Right now, the United States is facing a challenge from China that has been developing for the last 20 years that it is responding to. And what I am hearing from these commentators that are critiquing the school of economics and saying that raising tariffs has no basis in traditional economics, they are failing to cite the main driver for these decisions, which is that we are in the middle of a financial war, of a capital war. Now, this war that the United States is fighting is a politically motivated war. And it is brought on by the working class of this country, the people who decided to shift from left center or center to right of center in the recent election. Now, if you listen to these commentators, reject the school of economics that suggests we put tariffs on foreign countries to rebuild the U.S. industrial base, all that I am hearing is those people looking at the working class directly in their face and saying, no, thank you. We see what you voted for, and we are still going to say, no, that is not the path that we think the world should take. Now, interestingly, some of these commentators come from within the United States and others come from outside the United States. Now, the ones that come from outside the U.S., they are making a statement that from their perspective is true. They see tariffs as hurting global trade and as potentially hurting the country from which they originate. Now, if you're coming from inside the United States and you're making that type of comment, what you're failing to see is that this current move away from global free trade and basically letting other countries have a free ride either from the security perspective or the right to use the US dollar and US treasuries as their global reserve currency and global reserve asset, that this imbalance is now politically motivated to be addressed and rebalanced. So when you're listening to commentators, let's say that they're from the United States talking about the current situation, they might not like Trump or they might not like the way that he's rolling out his agenda. But they must, in order to be intellectually honest, admit that this is a move away from financialization toward the working class and the U.S. industrial base. If that is not acknowledged at the front, then it's almost irrelevant what the critique of tariffs are, because the critique is an economic one from what I'm hearing. I even heard a very respected academic say that the school of economics that Trump is trying to follow is not followed by a single economist in the world outside of Peter Navarro. Now, you guys can go find who this individual is that said this. I could not believe my ears because it's such a blatant effort to dismiss the working class's desire for a change. Whether you agree with that change or not is its own issue. Address it as that. Don't say that No economist in the world thinks that raising tariffs is a good idea. That's not what the Trump administration is saying that they're doing. Go listen to any of the speeches that have been made from Secretary Bessent or the Chief of Council of Economic Advisors, Dr. Stephen Myron. Now, you might not agree with Dr. Myron's approach to economics. He obviously has, and as he's outlined in his material before he entered this current administration, that he sees tariffs as an opportunistic way for the United States to get involved in rebalancing. He's trained at Harvard. He's not coming from nowhere. He has a perspective. He has an opinion that he's arguing it. Now, if you want to go and address the issue of tariffs, bring it full force. Bring in the currency manipulation. Address the security public good that the United States is providing to its trading partners. Address the fact that these countries can finance themselves in US dollars without any cost and without the United States holding them accountable for fair trade practices. Now, the USTR, the United States Trade Representative, this is an office that takes account of all the trade relationships between the U.S. and the rest of the world, and they are releasing and rolling out in these negotiations every single violation that these countries have committed on trade with the United States. I don't hear a single one of these critics referencing all the violations that the U.S. has uncovered for the last several years on matters of international trade. The loudest voices in crypto, finance, and economics do not understand Bitcoin. Join Parker Lewis and Dhruv Bansal for Bitcoin Not Crypto, a 3-part masterclass that lays out why 21 million is the key breakthrough and how Bitcoin, not blockchains, creates decentralization and why everything else will be built on Bitcoin. Understand why Bitcoin works and why nothing else does. Register now at unchained.com/TBL. That's unchained.com/TBL. Back up your seed phrases in titanium. Stampseed is a DIY titanium seed plate provider. They offer their own hammers, seed plates, and the tools that are required to hammer your seed phrases into titanium. These plates are rust-proof, fireproof, and they stand the test of time. Stampseed is now offering customizable titanium seed plates. Upload your logo or design, and they will laser engrave it on the back. A secure backup that is uniquely yours. Make it personable, make it unforgettable. Stampseed.com. And what you can see here start to develop is a war of words, and in that war of words, you are easily able to tell who is playing for the other team. Now, when I say playing for the other team, I'm talking as an American that believes in the electorate in this country versus what they have voted against, which is globalism and the hollowing out of the U.S. industrial base. Now, again, you might think that the United States exporting manufacturing jobs to another country is okay because in that way, we are driving down the cost of goods and services to where it can be most cheaply produced. That is fine, and that is a school of thought that has existed for many years, and it's being challenged, especially by those that are identifying, number one, the buildup of the Chinese military, number two, the artificial strength of the US dollar that is caused from a trade deficit and a capital surplus, number three, the global supply chain, and realizing that after 2020 and a global pandemic, that each country needs to have a way to secure their supply chain that is not reliant on China. So all I'm hearing with all of this hysteria, and it's not just hysteria from the media, it's from very quote-unquote respected voices out there. And I'm not going to name names, but you guys can go listen to these people. These are people that are professors at top universities, people that are even large investors. I read a commentary from somebody that I know. She is the head of a financial services company, and she is writing, comparing a hedge fund investor arguing that tariffs are one of the most dangerous things that they've seen, and that they have a 90% probability of bringing a seizure to global trade. And she actually used Dr. Stephen Myron as the other side of the argument, and saying Dr. Myron has no financial market experience, and yet he's saying that tariffs are good, while this hedge fund manager who has decades of financial experience is arguing that tariffs are bad. And that is her reasoning for why tariffs are bad. I honestly couldn't believe it. And this is the financialization of the world that the administration is trying to get away from. And I want to work in the stock market here because it's really, really important. When financial asset prices go down, and people like this woman and the hedge fund manager that she referenced, they look at the stock market going down and they think that that is the sin. That is the worst thing to happen. And when I talk about the Wall Street Journal and Bloomberg being unreadable these days, they're talking about the stock market going down as if that is the evidence that Trump is making a mistake. Again, not referencing that this is actually politically motivated and a working class effort to reclaim something that they believe is theirs, whether or not you agree with it or not. And so the lack of context that is provided from top financial minds, from the financial media, from top academics, it makes me believe that they don't want to see what the people want. They want to tell the people what they should want. And guess what? The people will tell us what they want. We only have a year and a half to find out if this agenda is something that the United States people agree with. So they will look at the tariffs. They will look at their input costs, and they will say, hey, this tariff either outweighed the benefit outweighed the cost, or the cost outweighed the benefit. And they'll go to the polls and they'll let us know. So in that spirit, we will give the administration and their efforts, which they believe are motivated by the people that elected them, we will give them time. We will let it play out. But we won't criticize the administration for rolling out unorthodox economic practices, which are trying to reverse a trend of 30 years hollowing out the U.S. middle class. We will not stand for that. Okay, next topic, the sovereign debt crisis. Can you guys find it? Let me know if you find it, because I've been looking for it for the past 5 or 6 years since people have been telling me that we're heading into a sovereign debt crisis. We did a video recently on the strength of the Treasury market and the coming strength of the Treasury market due to many changes. Number one being a change in capital charge. This is called the elimination of the SLR. Another way of saying this is that banks will soon be allowed to stockpile treasuries without it being punitive to their balance sheet strikes, as in their leverage restrictions deemed by the Treasury Department and the Federal Reserve. So we will continue to watch any announcement on SLR and capital charges. But without that, the main driver of strength in the Treasury market is going to be U.S. fiscal health and inflation. And so with strong U.S. fiscal health and low inflation, that will cause a strong Treasury market. Now, do we have strong U.S. fiscal health? No. Might we be on the path to it? Perhaps. Are we on the path to lower inflation? Perhaps. Are we miles and miles away from the 4 and 5% inflation readings that we saw during 2021 and 2022? Yes. And so for those reasons, we do expect some strength in the Treasury market. We expect this week the Treasury Department to announce no increases in long-term issuance, to use the bill market as their plug for any increase or decrease in deficit. We see interest rates falling relatively so to the past couple months, we see importantly, very importantly, we see no Federal Reserve push to shore up liquidity in the Treasury market. I think that that's a very important thing because the last two times that we had immense volatility in the long end of the curve, 2020 and 2023 spring with Silicon Valley, Signature, and Silvergate, and First Republic, we see the Fed rush in for a bailout. This time around, nothing of the sort, and the Fed was even saying that they feel that financial markets are functioning just fine. Now, what you will likely be seeing over the next couple years is a large increase in sovereign debt issuance outside of the United States. We know that Europe is going to have to militarize, and they're going to have to do so through defense spending if they want favorable terms in negotiation with the United States. We know that China's interest rates have fallen precipitously over the last couple years, and that the Chinese government will need to finance a massive wave of fiscal stimulus to get their own consumer going. They should be taking advantage of low interest rates at the sovereign level to do that. And so perhaps interest rates around the world will rise due to large sovereign debt issuance. But if you guys can actually find this sovereign debt crisis here in the United States, make sure you tell me. Now, not only do I believe that we are not in a sovereign debt crisis, I believe that the Treasury market is about to take a step forward in its importance. And I say that at the same time that the U.S. executive branch is putting other countries on watch for stockpiling too many U.S. Treasuries. What I believe is happening right now is a securitization wave across the world. Now, what that means is that banks and central banks around the world, in order to gain access to US dollar liquidity, they will have to have a larger stockpile of US Treasuries. Now, think about how the Eurodollar system operates. If a bank in London and a bank in Paris have clients that are sending money to each other, the London person sends money to the person in Paris. Now, they send dollars, but as those dollars move from Bank A to Bank B, Bank A's deposit account for its customer goes away. Bank B issues a deposit to its customer. But how does the Paris bank call the London bank for funds? Does the London bank send reserves that it holds at the Federal Reserve over to the French bank? Absolutely not. Neither has a reserve account. So basically what happens is that the London bank issues a Eurodollar deposit to the French bank and basically says, I owe you in the future. Now, what that does is it creates a US dollar system, the Eurodollar system, that doesn't require any collateral, doesn't require a central bank. But in the current wave that I'm seeing as we go to more of a securitized world, those banks will have to have treasuries to lend money to each other. So how does the London bank send money to the French bank? Basically, it has to borrow and pledge a treasury security as collateral for those funds. Because the other option, and this is what you guys have to see here, the other option is that the London bank, which probably has a deposit at a bank in New York in the onshore system, and that onshore bank is going to have reserves at the Fed, that London bank might transfer that New York balance to the Parisian bank. And that is what I see a greater reliance on, is that onshore money and U.S. treasuries will be the basis now for the Eurodollar system, as opposed to the Eurodollar system basically functioning on thin air. And what that causes is this scenario here that I'm calling a grand deleveraging of the Eurodollar system, as well as a war on shadow money. Dollar recycling, that is the target here. shadow money which exists outside of the United States, that Eurodollar deposit that the London bank issued to the French bank, that is not based on any U.S. collateral, a U.S. deposit, or a U.S. Treasury. It might have some associated with it, but previously that system could operate without using onshore collateral. And the reason that the offshore system could operate like that is because in 2007, when we saw a LIBOR crisis and the offshore dollar system start to break down, the Fed came in right away with swap lines for the ECB and the Swiss National Bank so that banks within Europe could borrow dollars from the ECB or the Swiss National Bank, and those two European central banks could print their own currency, post it as collateral to the United States, and borrow dollars. I believe that system is ending, and you might be seeing the United States responding in financial warfare right now by cutting off these central banks from the swap line. And it's not a hard cutoff. This is what is most important to understand. It's not a hard cutoff. It's not that the European Central Bank won't be able to borrow dollars from the Fed. It's that it might not be able to pledge euros as collateral. The Fed might say, give me treasuries. In the foreign repo facility, I have the ability as the Fed to take in your treasuries and lend you dollars. So why don't you do that? And if you want to do that, you have to have treasuries to do so. This is the move from unsecured to secured money, and the secured money requires U.S. treasuries. So the word SOFR is secured overnight funding rate or financing rate, and the secured means it is secured by treasury collateral. It's the Fed saying, if you want to play ball in dollars, you better own treasuries first. None of this out of thin air, based off nothing, non-collateralized, non-secure Eurodollar market. And so what you really have here is a war on Eurodollar recycling, a war on shadow money, and a war on highly leveraged, non-secured US dollars. Because that is the system that creates artificial strength for the US dollar. It also creates a pool of capital to buy U.S. treasuries, and I am not ignoring that side. But neither is the administration. Trust me, they know that there is a cost benefit to the agenda that they are taking under, and we will have to wait and see the consequences. Thanks for sticking with us today at the Bitcoin Layer. If you are interested in more in-depth quantitative research, if you are an investor looking for another piece of the puzzle for your research framework, go to thebitcoinlayer.com/subscribe, become a TBL Pro, subscribe to this channel and this podcast on your favorite audio platform, and we'll catch you guys next time.